This is not a world where anything can be safely called investing. It's a dangerous world for our money out there, and it's better to think of ourselves as speculators. Monetary, not precious. Money, not commodity. In that context, then of course I'm bullish on the monetary metals, gold and silver. My uranium bull friends don't like it when I say this, but the fact is that this is a space that can literally blow up on us.
Hello everyone, and welcome to Commodity Culture Interviews, where we seek to break down the commodity space for both new and experienced investors. Before we get started, standard disclaimer, none of this is financial advice. Do your own due diligence. And with that being said, I am beyond thrilled to introduce our next guest. He is an expert in the commodities space and appears as a regular guest on shows such as Kitco News, Liberty and Finance, and the Wall Street Silver YouTube channel. He also runs a website and newsletter called the Independent Speculator. Mr. Lobo Tiggre, welcome to the program.
Thanks, Jesse. First time, happy to be with you, and hello, audience. Let's see if we can deliver some value.
Yes, I love it. Let's deliver value. So I want to get started, like I do with all my guests, into their own journey in investing, and particularly with commodities. So where did your journey start, and when did you discover commodities?
Okay, you're going to maybe love and hate this answer. The honest short version is that I didn't get here by wasn't what I knew, I was who I knew. I was friends with legendary speculator Doug Casey, and he had just formed Casey Research with his then partner David Glenn, and they were looking around for a writer, and they said, "Oh, what about Lobo? He can write." So I didn't know what a warrant was. I'd never bought a stock. So that's the part you might hate is, I really wasn't qualified. I got here by being a friend. I like to think that I learned a thing or two, and they kept me on because I was competent and not just because I was Doug's friend. I like to think that's true. The other side of though is that I've long been a libertarian, hardcore libertarian, hard money advocate, gold bug, if you will. So that whole perspective, the hard money and where does it come from, and then therefore mining and metals and all that, it fit together. Also, I collected rocks as a little boy. It doesn't make me a geologist, but it matters because I was always the sort of person that was fascinated by the geology, the science that underlies the investment world that I work in now. So I think that does matter. People should, as a general principle, success in investing, and even more so in speculation, the due diligence that you talked about, that's work. I mean, you want to get paid, you got to work to get paid. And if work is fun, if work is interesting to you, you'll do a better job and you'll get better results. So the love-hate answer here is I got the job because Doug knew me, but I think my own attributes, my qualities made me well suited for the job. And of course, I had fantastic teachers. Doug introduced me to Rick Rule, and I got to go kick rocks with truly world-class geologists out in the field. I met Lowell before he passed on, and some of these legends, Adolph Lundin, people like that. So it was just a fantastic education to be thrust into this world with serially successful people and to be able to learn from them.
Great. So your website is called the Independent Speculator. How do you differentiate between speculating and investing, or are they two different versions of the same thing?
Commonly confused, and this is a Doug Caseyism here, where the main misconception is that speculating is a disciplined thing that smart people do to be careful with their money and earn some more. And speculation, that's wild gambling and it never works, and it's a get rich quick scheme that's it's a fraud and so on. Even Benjamin Graham, I wrote an essay called Graham's Greatest Error or something like that, because his experience with speculators was that sort of person. It was somebody promoting. We call him a promoter these days, some kind of pump and dump scheme. And in his experience, these things always ended in tears. I think that's a false dichotomy. I think he made a mistake. There is such a thing as disciplined speculation, which is not gambling. The difference is you invest, it's the simplest thing. You buy a bond, not to trade a bond up and down, but you buy the bond expecting to get paid the coupon on maturity. That's an investment. An investment is a deployment of capital for expected returns. Obviously something could happen, but generally speaking, it's a low risk deployment for expected returns. Speculation involves an unknown future. And speculation involves pitting yourself against the market now, trying to think of how things will be in the future. It usually requires contrarian thinking, but it is not wild gambling. If you look at government policy, for example, just because it's such an easy target to pick, right? And it's clearly inflationary. It's, money printing up the wazoo. We don't know any countries that have done that recently, do we? Right? Fiscal and monetary policy, so easy. That has clear implications if you're willing to think into the future. Now, of course, who knows, right? A comet could come destroy us all tomorrow, and even the most obvious trend could fail. That's why it's speculation, because you are projecting into the future. If you're smart, you're not thinking the future. You're just projecting probabilities into the future. And it's different. It's not buying the bond, right, with the 10% coupon and getting that at the end of that time. It is thinking, oh, well, this will happen. This may happen. This probably will happen. Therefore, I'm going to speculate accordingly. But it's still disciplined. And it may sound, shocking to somebody who hasn't heard it before, but I consider myself a value speculator. I'm not just relying on the greater fool theory, right? Just chase after whatever the flavor of the day is and hope somebody else is dumb enough to buy it at an even higher price from me later. No, I am looking for overlooked gems. I am looking for situations where I think I know what's coming that the market hasn't realized yet. And that could range from, looking at a project, due diligence on site and thinking, wow, this is a much bigger discovery than the market realizes yet, to thinking about what we were just talking about, like with inflation and things, and thinking, wow, this trend, it is so obvious that this has to go in this direction, or is very likely to go in this direction. I'm going to position myself appropriately to benefit from that trend. So probably a bit of a long-winded answer there for you, Jesse, but I think this is really important, because people they'll dismiss speculation, or they'll think there's something wrong. The speculators are evil. Richard Nixon told us that it was those evil speculators that were destroying the dollar, and therefore he had to temporarily suspend the convertibility of the dollar into gold. And but rest assured, your dollar tomorrow will be worth just as much as it is today, if you're not one of those evil speculators. So I think it's important to set the record straight. Disciplined speculation, I think, it is a reasonable way to deal with a very chaotic and unpredictable world. Final point here would be, like, I have said this since 2008. In the post-Lehman world, really, we're all speculators now. And there is an advantage to the people who recognize that. Because, if you think you're a safe investor in a world where suddenly there's war in Eastern Europe, or COVID shuts down everything, or financial institutions have never really gotten healthy without government help in the last 10 plus years, this is not a world where anything can be safely called investing. It's a dangerous world for our money out there, and it's better to think of ourselves as speculators.
You have expertise in a lot of different commodities, so I wanted to run through a few of them with you and get your thoughts. What about gold? So we'll talk about precious metals. I want to start off with gold. Where do you see gold positioned right now with all of the money printing? Obviously, with the precious metals, a lot of people get into it thinking that it's some kind of investment that's going to earn them a lot of money, whereas others see it as more of an insurance policy. Where do you stand on gold and its role moving forward?
Yeah, let's tease apart a few things there. The first one I would say is you started by saying, let's look at commodities, and you said gold. And as a monetary metal, I don't really think of gold as a commodity at all. I think of it as money, and it competes with the dollar and other forms of currency out there. And I think it's a mistake, actually, to even call it the price of gold. I think of it as the gold-dollar exchange ratio. And there are other exchange ratios that are relevant out there. And this feeds into the answer to your question. But first, one more definitional thing to tease out. I also, as you just heard me say, call them monetary metals, not precious metals, because they're not just expensive metals. And actually, silver isn't all that expensive compared to some other precious metals that are not monetary. Palladium has never circulated as money, and most people wouldn't know palladium if it bit them on the posterior. right? I mean, it's just some other silvery metal. So gold and silver are very specifically monetary metals. They have been used as money for thousands of years. They are the word for money in various languages, particularly silver. And that is a special use case. That doesn't mean that they have no other use case. And people kind of see that with silver, right? Solar panels and all that. But it's actually true with gold too. Mises regression theorem. There actually is a use case underlying why gold is valuable. It's not just a pet rock. So monetary, not precious. Money, not commodity. In that context, then of course I'm bullish on the monetary metals, gold and silver. Now, I'm sure we'll get to this later. Gold and silver are different. Their prices have been acting kind of crazy with respect to each other recently. But for the time being, they're both monetary metals now. I expect both to do very, very well in the high inflation environment we're in going forward. There's a lot we can, directions we can go from there, Jesse. I don't know how far you want to go down that rabbit hole, but the short version is that I think the fundamentals could scarcely be better for gold. And on top of that, you have this fear factor. We've got war, we've got plague, we may have famine soon too, for what we're hearing. This is an environment in which safe haven demand, it's just not going to go away. So I see gold and silver, but I see them as being investment grades that have limited downside and potentially an enormous amount of upside. That is, of course, different from your insurance function of saving in gold, bullion that you hold in your hands, you have in your safe or your midnight gardening or wherever you store your stash, right? That financial asset that you can be long, for which there is no short, the ultimate form of liquidity in times of need. It's a very different thing from, is the price going to go up and down? If you're stashing bullion because you want it as an emergency fund, you don't care what the price is. If heck comes to high water, an ounce of gold is an ounce of gold, and someone will exchange it to you for things of value that you need in that emergency situation. That's been the case for thousands of years. So completely different thing, right? Saving for a rainy day, that gold or silver insurance policy is one thing. The kind of trends, the investment thesis, that's another thing. And honestly, I'll tell you, I don't actually invest or speculate in gold or silver. I save in them, and then I speculate in the stocks. Because if I'm going to bet on price movements, the stocks give me a lot more leverage to the underlying commodity. This is true for copper, oil, uranium, everything. It's why so many of us speculate in resource stocks, because they give us this enormous leverage to volatile commodities. So, a bit of a long-winded answer again there, Jesse, sorry, but it's a complicated issue and it has several functions. The bullion, savings, emergency, insurance fund. For speculation, not just investment, for speculation, I don't even go the middle ground. I don't bother with the ETFs, for example, gold or whatever. I just go right to the stocks. And I like the junior stocks, volatile as they are, because that's 10-bagger hunting ground. That's where I can bag, big wins if I do it right.
So could you maybe walk us through your process when you're looking at a mining stock? What are the things you're looking for if we're talking about, let's say, a junior gold mining company?
Sure. I do have ideas of my own, promise, but so much of this I was taught by Doug and Rick, and Doug Casey taught me his 7 Ps of resource stock evaluation that became 8 or 9 Ps over the years. But that Doug Casey formula, and it's people, paper, financing, property, politics, price. Oh, I'm running out of P's here, but you get the idea. But the key point here is there is a checklist, right? You want to see the merits of the property. You want to look at the company's financial and capital structure, their financing, their ability to finance going forward. What paper might hit you, cheap warrants or options and things. All this stuff is good. The first P is people. And someday I'll write a book on answering this question that you've asked me, Jesse, but it really starts with the people. And when somebody suggests a company that I should look at, one of my interns comes up with some bright idea, or my clients, they request evaluation. One of my services is called My Take, and it's not my portfolio, it's my take on your stocks. So it covers hundreds of stocks that clients have requested. And the first thing I do when I pull up a company's material is to look at the people page, look at the management, look at their past history. If it's one lawyer and a few consultants and they're trying to explore, that makes me nervous. If it's a guy who I know and has found several mines in the past and put them into production, and that's what he's doing now, as Rick likes to say, in the same metal, in the same geology, and he's doing it again, that gives me a great deal more confidence. And, sorry to say, but there are scamsters, or let's say there are lifestyle companies out there where the objective of management really isn't to deliver value for shareholders, but just to keep deriving a salary until, they move on to the next vehicle. And I have a list of names like that I avoid assiduously, people who have sent a lot of money, shareholder money, to money heaven. And that's something I look for. So there is a process. You can actually, there's a free download, not on my website. I think Doug Casey, if you search for Doug Casey 7Ps or 8Ps of resource evaluation, you'll find that as a free download from my former employers. And that's still the basics that I follow today. But people is absolutely the starting place. The best rocks in the world can be messed up by crooks.
So let's move away from the monetary metals now and talk about base metals. Are there any of those that are on your radar? Copper, nickel, is there anything that you're seeing right now that there's opportunity in?
Sure. I think it's important to frame this with the bigger picture right now. And I know that, we're talking now, and this is a somewhat educationally focused video, and maybe in a year this won't age well, but the context right now is really powerful. We are truly seeing history happen. We've got war in Eastern Europe. We've still got the COVID lockdowns, getting bigger and badder than ever in China, which is, not just some far off land. That is the manufacturing heartland of the world, of major importance for the global economy. So the things right now that argue for inflation writ large. We have governments talking about tightening, but way, way behind the curve. And you still have all these supply chain disruptions and other factors that are very inflationary. So all of the metals, really, you could just say all commodities, if you had to, guess, you had an average, all of them can be expected to go up. That said, rising tide doesn't necessarily lift all ships equally. Some of them will have big gaping holes in their hulls. They'll swirl around a bit and then go right back down. So it does pay to be choosy. I think, a first step of narrowing would be, I think energy does well. This attempted shift to alternative energy is clearly going to take longer than anybody wanted. And with both the COVID situation and the war, energy has become a new crisis. Even Germany, not some third world country, but a very woke first world country, is burning more coal now. So the energy space, I'm very bullish on, and the access to capital that's been slashed from the oil patch because it's been politically incorrect means underinvestment in that area will lead to higher prices. And of course, uranium marches to the beat of its own drummer there. So I like the energy sector. If there is a major economic downturn near term, of course, the energy sector sells off a bit. But actually, I would not assume that it goes down much or for long. Not if it's an inflationary recession. Not supposed to be possible if we ignore the 1970s. But the reality is not in the models. It's out the window, and out the window, we're seeing signs of economic weakness and high inflation. So that could continue. I like energy. I like another area of focus would be any of the metals and minerals that are necessary for these alternative technologies. So you got your copper, your lithium, and all these things that go into the green agenda. That gives those things extra push. I am cautious though, because this is still an emerging technology and things are changing. For example, Tesla just reported, I think about half of the cars they sold in the last reporting period had the LFP batteries, which have no nickel or cobalt in them. They have a shorter range, but they charge faster and they heat up less. And for people in urban areas where they're not, they don't need a 500-mile range. They're perfectly fine with 200 or 300 miles. These are actually a better solution. They're cheaper and better. So the part of the nickel narrative has been that, oh, well, we got to have more nickel for all the electric cars around. Well, what if we don't? What if, as the electric charging infrastructure gets built out, the so-called range anxiety goes away, and that whole market changes? So you still need to do your due diligence. You still need to be careful. But as a class, I'm very bullish on anything that's necessary for the electrification of the world. And that includes silver, by the way. It is a monetary metal, but it also has its industrial side. And a key part of that is that, for now at least, silver really is essential for solar panels. All of the commercially available ones now, there are new designs that are looking at different things, but pretty much any solar panel you go down to the store and buy today, including Tesla solar roofs, by the way, they all use silver. So silver has, it's kind of a win-win metal in this environment. It wins by the monetary drivers, and it wins as an essential metal in the green agenda here. So, and by the way, even if you don't like the green agenda, you don't think it should be happening, our objective here is to make money on the trends that are in the world, not to pass judgment on whether they should or shouldn't be. So yeah, I just put that out there. If you don't like the green agenda, don't make you miss out on investment opportunities because of your political beliefs. Look at the facts and invest accordingly. Final takeaway on this. A lot of these metals have zoomed up a great deal. That does make it dangerous, especially if there is economic downturn in the near term. The shocks from the war and the tightening, the attempts to tightening by the powers that be. There is near-term downside on metals that have shot up a lot. Of the ones that I'm most confident come out of such a shock, well, one would be silver, actually. Another would be copper. And even if the battery chemistry changes and we use less nickel and cobalt and different things, there are non-lithium batteries proposed as well. But all of this stuff takes copper. The cars, the connections, high power transition lines. Okay, those tension lines are aluminum, but your housing, wiring, most of these applications require a great deal of copper. That's the one thing that I can't see being replaced in this space. And people have called lithium the new oil, but I actually think that copper being the new oil is a much better metaphor. So if we do see fluctuations and corrections in this space, copper is definitely on my shopping list.
You mentioned uranium, so we have to talk about that. That is my favorite commodity of all time. I love it. It's very overweight in my portfolio. I see it as one of the greatest asymmetric bets to the upside that exists today in the commodity space. Personally, I see it as inevitable. What's your stance on uranium? I know you're bullish on uranium. Where do you see the industry right now?
I am bullish on uranium. It's important to get that out there because I just did another interview today and I don't want to repeat myself. But the fact is that I'm trying to give you my best thoughts. I'm trying to give you as well as I can see it, as accurately as I can project probabilities, and my understanding the markets now, what I think makes for a good investment and a good strategy. That's not always what bulls want to hear. They want cheerleaders. It's going to the moon. It's going to triple digits tomorrow. All that stuff. And when I say, well, it doesn't hurt to take profits. Nobody goes broke taking profits. I get accused of being some kind of trader, oh, you don't have conviction in the trade. How could you take profits? It hasn't gone to $200 a pound yet. It's inevitable. That's the one that really gets me. It's inevitable that it's going so much higher. How could you sell anything? Well, in the first place, I didn't say get out. I didn't say uranium's done. I said take profits. That's not the same thing. So in fact, like you, I have a very large portion of my portfolio in uranium stocks, and I have taken profits on all but one of them. And I'm working on that last one because all of them are way up. And if I've got more than double my money, then as bullish as I am, if I can be risk-free in the play and still have more money than I started with, as much or more money than I started with as exposure to the upside, how great is that? That's how you sleep at night without waking up and all your hairs turn gray or falling out, Jesse. And no, it doesn't mean you lack conviction in the trade. It doesn't mean you're a trader or anything like that. And particularly in this sector, my uranium bull friends don't like it when I say this, but the fact is that this is a space that can literally blow up on us. And another Chernobyl or something, which, we've learned so much. People say, oh, it'll never happen again. But there's a war going on around 15 reactors in the same neighborhood as Chernobyl. So, never say never. I'm not preaching doom and gloom here. All I'm saying is that in a space like this, where the stocks can really just take a 90% haircut overnight, this is not a space where you want to leave all your money on the table. I mean, it's so hard to make big money in any space. Imagine having a 5-bagger or a 10-bagger on some great uranium success and not having recovered any of your investment, and then waking up tomorrow and discovering that the war has breached some reactor and people are panicking everywhere and all these stocks are just going no bid, Jesse. Imagine how you'd feel if those gains slipped through your fingers. So I'm going on too long about this, but I have to phrase it this way because people beat up on me when I just simply talk about the prudent notion of securing your gains. So I'm extremely bullish. I think this is not just, our friend Rick Rule likes to say, don't confuse inevitable with imminent. And we've made so many mistakes confusing inevitable with imminent. Well, I've seen that and I've paid attention to that. And imminent has still proven trickier a concept than I'd hoped. So my refinement on that Rick Ruleism is forget about inevitable, forget about imminent. I want happening now. And uranium is happening now. It's not just a blurt from last year. It's on a 5-year uptrend. It has been, on a 2 steps up, 1 step down, 2 steps up, sawtooth pattern for 5 years. And that's actually good news. It means the people who missed it before can buy on one of those 1 steps down, which we're in right now, and then benefit from the next 2 steps forward. Now, that doesn't mean that they can't go any lower. If there is a stock market crash, uranium stocks are stocks, they will go lower. But it does mean that this is a trend. This is an example, like we started this interview talking about the difference between speculation, investing, and gambling. This is speculation because we don't know what's going to happen. But this is a trend in motion. There's a trend happening now. It's extremely bullish, and it's supported not just by the technicals, but by the fundamentals, right? Demand is there. It is growing. China alone wants to build 150 reactors. And it's all around the world, even in the woke West now, where people are realizing that they actually need nuclear to meet their climate change goals. All the pieces are aligning. You've got the story, you've got the fundamentals, the market fundamentals, you've got the technicals, and you've got price breakouts. So I like it a lot. I agree with you. It is potentially, my favorite space right now. But I just can't ignore the fact that it is one that it pays to be prudent. Like gold is never going to zero. You're not going to wake up tomorrow and find that there's some horrible accident at a gold mine and the price of gold goes, off a cliff. It goes up and down. It doesn't crash like that. Whereas that can happen in uranium, and the stocks give us leverage. That's why we love them and we hate them, right? They give us leverage. So all I'm saying is be prudent, be sensible. You don't have to give up and get out, but, make sure your gains don't slip through your fingers.
I love your take on that. Very practical as always. And I think it was the great Howard Marks who said that, black swan events happen much more frequently than people really think they do. So it's always prudent to not put all your eggs in one basket there. Well, thank you so much for coming on the show. It's been an incredible conversation. Could you let people know about your website and newsletter, The Independent Speculator?
Sure. Well, thanks for that. The simple thing to do here is there's a lot going on. There's an enormous amount of free material. There are free reports to download. There's free content posted all week long. But the best way to get a feel for what we can do for you is to sign up for my free weekly digest. And I know, that people get nervous about this because you sign up for something and suddenly your mailbox explodes with all these advertisements and stuff. So you may or may not like my work. I may or may not be your due diligence guy, but I can promise you that I will not flood your inbox with advertisements, every day, all this stuff. You sign up for my weekly email, it's free, and you get 1 email per week. And then see what you think of it. independentspeculator.com. Sorry. And that free product, it's not available on the web, by the way. You can only get it via the email list. And that is called the Speculator's Digest.
Great. Well, I'll be sure to link to that in the description below, as well as your YouTube channel where you interview some very great guests as well. So thank you so much, Lobo. We'll have to have you on in the future to continue the conversation.
Thanks, Jesse, and good luck with your new service here.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.